unfortunately, folks, another one with palms out, but we had unusual put activity in this one as well, and that would be Edwards Lifesciences. EW is the symbol here, folks. And Edwards Lifesciences, heart valves and things like that, because they are in the life science space. But shareholders have lost over $13 billion in one day, Pete. And this isn't a $1 trillion stock. So 13 billion, yeah, that'll leave a mark. This is a drop of 29% in a single session, Pete. We're approaching 14 billion in losses. Basically, Wells Fargo, Stifel, Evercore ISI all took their targets down. And like I say, we had unusual put activity. What does that mean? Well, when you take a look at the puts that they were buying the August 85 puts. So they could have bought another put, but back in June, they said, you know what? Things aren't looking so swell. If you look to the far left side of that screen, folks, it says 611. That's June 11th. They were buying with the stock at 87 bucks, the 85 puts, obviously a little over $2 below the market. Well, those puts blew up into big puts really fast on the move after earnings, right, Pete?
Oh, absolutely. Just slam it. I mean, this is unbelievable how accurate some of the UOA can be at times, and especially what we're seeing today out of Ford and then obviously with EW. This is just amazing. I mean, what they did, John, they disappointed in so many different categories that it's not even worth going through all of them, other than to say, hey, look, they had to cut their guidance. Why did they do that? Well, because the biggest moneymaker that they've got absolutely is getting hammered. So that's not good. That means margins aren't very good either. Matter of fact, margins are dropping to the lowest levels that we've seen in quite a while. And as you said, there's a lot of folks out there that are analysts out there that are following this one. Well, the downgrades are flowing in and the price targets are flowing down because there's a lot of problems that they see into the future of this. And because of that, it's making it a really, really difficult trade for those that are bullish for sure. And the stock is awfully close to those 52-week lows if it hasn't already hit them already, John. It was getting really close, right around that $60 level. So absolutely awful report just about in every category. And unfortunately for EW, it's going to take a while to dig out of this hole.
Yep. Worst earnings in 9 years, folks.
Yeah.
And whenever you hear Pete and I talking about, well, we had unusual activity, meaning that they bought a large amount of calls if it was something that they were betting on upside, or puts if it was something they were betting on downside. You want to learn how to do that? Why not start off with our free book, It's Not an Option.com. You can just grab It's Not an Option.com and you just pay shipping, folks, shipping and handling. That, I think it's under 10 bucks. The book, it's 247 pages. Like I say, this is not just a bunch of pictures of graphs and things like that. This is very robust instruction on what you need to know to trade like we trade. And then maybe you'll subscribe as well at marketrebellion.com. Remember, by the way, folks, Pete and I will be not only in Vegas coming up next week, but we've got a big event with Grant Cardone down in Miami, October 9th, 10th, and 11th. We'll be telling you more about that.